Hello everyone, so today we're going to be looking at EURUSD, and this is actually a little bit of a different style video because usually we do analysis or we do a trade breakdown that I've already done, but we're actually currently in a trade and I want to explain to you, at the moment you can see that we're actually in a loss at the moment, which it was very close to my stop loss, but I'm still haven't shown that fear of missing out and I haven't actually left the trade just yet. And there is a reason for that, and the reason why I'm doing this video, and I actually haven't done a video in a very long time, so I thought that this will be the perfect video to come back to YouTube with. I think I haven't uploaded for around 3 weeks, and this is just because I'm being a little bit busy. I was in the process of moving out, but now we are, back on the markets, and I was trading in those 3 weeks, but I just didn't have the facilities to basically do YouTube. Now, looking at EURUSD, now I've been trading, the USD pairs and the Euro pair, and I've been trading that for quite a while, and usually we have, profitable trades. Usually we have a lot of losses as well with EURUSD, but majority of the time I do end up having a lot of profits with EURUSD. And this is a Monday morning, and I want to just basically break down why I placed this trade and what my thought process was, because I think a lot of traders, they can do trade breakdowns, they can trade multiple times throughout the week, or they can do analysis, but it's very important on what happens in a trader's mind. I feel like it's very interesting to see why a lot of traders place their trades and what is it their thought process with placing the trades. I think that differentiates us between gamblers and traders, because when you're trading you need to have a set plan. Now with me, I have a set plan, I have my strategy, and then as soon as I see that, I execute. Now this is where your thought process comes in. Now, if you don't have that plan or strategy, it kind of puts you in that sense of, okay, I'm not trading, I'm actually gambling. And this is why it's very, very important as a trader to have a plan and execute a plan by any means. Even if it means that, today is one, let's say, for example, you're here and, you're saying that, okay, price is going upwards, we're going for upwards push. Let's say you place a buy over here, take profit, maybe let's say all the way up here. Again, that's your plan. Let's just say it was a strategy. Again, that will you would hit a loss, but you have to hit losses when it comes to forex. And the reason why you have to hit losses in forex is because that's the only way you're going to win. Now you can either hit losses on the demo account or the real account. Me personally, even with my students, I always try and go for the live accounts, only because your psychology is a little bit different when you're on a live account rather than a demo account. You technically don't really care about what's on the account, whereas a live account is your own money that's come out of your pocket. You care about it, so you want to basically have as many wins as possible. Okay, so what we're going to do is we're going to look at EURUSD. We're going to see what my thought process was and why I hit this trade. As you can see, we used one of my favorite tools in the trading industry, which is the Fibonacci tool. And I've been using this tool for almost 3 years, and it's been a very, very good tool for me. And I just want to explain to you why I use this tool and how we use it, and at the moment why I haven't left my sell in EURUSD. So at the moment we are looking for 73 pips on EURUSD. We're looking for it to come back down to the 1.09, around 500 area. The reason why I would like to see that area again is because I felt like we had really, really strong bearish pressure in the market. Now looking at the market again, we've been very, very close with our moving average, so we are still we're still very, very close to having an impulsive move. When moving averages are very close together, like around over here, we see price is really, really close. We then see a huge impulsive move where the moving average crosses over and then it becomes much greater. The distance between them both become much greater. Again, over here, the greater the distance, the better the trend. Over here, we have a really, really small, it's a really, really small distance with the market and the moving average. Now, for me, that was something where I was like, okay, cool. It's a Monday morning. I usually trade in just before the London session, an hour or two before the London session. I was like, okay, cool. With EURUSD, I know that throughout the day, we're going to have, most likely a consolidation. So I was prepared for that. Hence why I put my stop loss a little bit higher than what I would have done. So I was actually on the 15-minute chart when I was looking at the market. I already had the whole setup of, let me just go back to the hour. I already had the setup where I had the moving average. So what I did was, so not the moving average, the Fibonacci. I saw a really, really nice rejection candlestick here. So I do my Fibonacci from the highest point to the lowest point. Again, we saw really, really nice rejection over here, price slowing down. Again, just trying its best to break that area. Couldn't break this area. Okay, so what that signifies to me is that that's a really, really nice level of support. That's become a new level of support. Then price ended up breaking this level over here, which over here would become its resistance, where, you know, a lot of traders will be like, okay, price will come up here, we're most likely going to sell, which it did, you know, fake us out. And if I just zoom in and you have a look at that candlestick, it did fake us out, and it did show that, you know, we could go to the downward side. It then retested the moving average and continued to go to the upside, showing that it was a break of structure. Okay, so that signified to me that, okay, cool, we might have a break of structure, we might be going towards the upside. But price did something very, very different, where when it retested, it failed to break this area. Now, it was a little bit of a gamble. I was like, okay, cool, if price breaks this area over here, I definitely don't want to be in a trade. So I was like, okay, cool. If price decides to, you know, break this area, I'm going to exit the trade. So I said, okay, cool. I'm going to put my stop loss a few pips above the area, because again, price can go in that area. Price can reject, you know, 1-2 pips above that area. It doesn't mean it's going to be a crazy, you know, upwards push. It can still continue to go to the downside. So you want to be careful with placing your stop loss. You want to have a few pips above the market or the market highs, so that then you have that leverage of, okay, cool, I've got a bit of more breathing space when price gets really, really close. Especially with a lot of some brokers that we have, they actually close you many pips before you actually get to your stop loss. So you have to be careful when you are with your broker. You are looking at the spreads and how it is, and you are looking at also your stop loss. Give it that extra room. Again, if it means that, you know, you're not getting that 1-to-2 ratio or 1-to-3 ratio, then maybe you just need to wait for another opportunity. Maybe you just need to be a bit more patient, because again, I could have entered again over here and having a better ratio of my trade. Unfortunately, I was a little bit in a rush. I do like to trade before the London session starts. And if we just get our session openings, you can see I actually entered the trade just at the London session. So I was actually a little bit late with my entry. Again, because I saw such a huge push to the upside, I wanted to just enter the market as quickly as possible so we can still hold on to the trade, but then I can also, you know, be in the market, because I wasn't available throughout the day. I don't like to trade. I don't like to look at the market throughout the day. Now it's getting towards the evening time where I like to do my YouTube videos and actually get to see how my trade is going. So again, if you don't know what this indicator is market sessions is one of my favorite tools to use, just to make sure that I am in the right session with the right currency pairs. Again, that is something that you just need to know with your strategy. With me personally, I like to enter just before the London session or as soon as the London session enters. Again, if I'm too late, I just wait for the next day. Every day is the market moves. So if you miss the market, if you missed an entry, it's fine. Go again the next day. Don't be chasing for an entry. Don't be chasing for, you know, to enter the market or be in the market, because you can, you know, looking at this side of the market, I missed this opportunity. You know, on a Thursday, I don't actually trade on a Thursday or Friday anymore, and I missed this huge opportunity. But Monday to Wednesday, I try to trade as much as I can so that this opportunity gets covered up. Do you get what I'm saying? So with this trade then, when I entered, unfortunately I did enter when the moving averages was crossing over. Again, there are some sort of delays with the moving average, so it's not always going to be the best, it's not going to be the best accurate, you know, oh, when we see a crossover, we should enter the market. Never do that. Always use different confluences as well. For me, I'm still confident that price might still, you know, it might not be the best downwards push, but I'm still confident that price might just continue going to the downside just because of this pressure here. Now, if price does go above here, I will be stopped out. But then that gives me another opportunity to maybe enter the market, maybe at the 61.8 extension, or even looking at some, resistance that we built at the 78.6 extension. So there's two other areas that I could enter the market in as well. Again, if it does get up to here, I will then potentially look for buying opportunities to buy towards these levels. But at the moment, I'm still looking for price to continue going down. And on the long-term run, I am expecting price, get towards the 1.0, 1.0, sorry, whoa, the 1.09 or even the 1.081 100 or 150 or the 1.08 200 as well. So there are a few areas that I am looking at. Fortunately, my Fibonacci tool gives me those areas, so I don't actually have to draw it out. So I know exactly that, okay, cool, price needs to get to these two areas. They kind of help me predict where price could be going. Again, looking at the history, I'm not going to go too far back, but looking at the history, price does look like it could go here. It's a really, really nice, again, if I just show you, really, really nice support / resistance. Again, over here, we are kind of pushing it, but then again, it was all the way back here in June. We have some sort of level of liquidity in this area where, it was resistance turns into support. So we have two nice targets. And I think with EURUSD, we can see some potential downfall. Again, if it gets below here, we do know that, okay, price could be breaking structure and it could be, potentially going to the downside. Again, I'm unsure if price is still going on the downside. It could be just, giving itself that retracement. Again, if we just draw a larger Fibonacci going towards the upside, you can see, oh, sorry about this. You can see, if I just place from the low to the high, you can see that, we have beautiful extensions. It could go to the 78.6 extension and then continue to go up. That's why I'm playing it on the safe side at the moment with the market. And I'm just saying, okay, cool. Let's just get to these lows right here first. If price breaks, we just re-enter when the market, if it breaks, we just re-enter right over here where price, where price is again, retesting the market. And it's as simple as that, guys, okay? So I hope you all enjoyed this video. Again, I haven't been on YouTube for a while. I actually haven't been on my Discord server either, so I do apologize with my Discord students as well. But the community over there is still growing. It's still really, really good. If you are a new beginner trader, feel free to DM me on Instagram. I do also hold a couple sessions, mentoring sessions as well. This is for traders that maybe have no understanding of Forex, or they do have understanding of Forex and they just need that guidance, especially with someone who's got experience, someone who actually does get, profits and who actually does trade on a regular basis. You go ahead, check out my YouTube videos. And just feel free to DM me any questions you like, any analysis you want me to have a look at for you. Make sure you go check out my Instagram. The link will be in the description below. Again, go check out my Discord server. Everything is completely free at the moment. My mentoring sessions, if you just DM me mentor, I will explain to you how that works as well. But everything else is completely free on YouTube, Discord. Everything is completely free. The MullaFX Academy will be launching soon as well, so stay tuned for that. And other than that, guys, I hope you enjoy this EURUSD breakdown of the live trade that we are taking. I hope you enjoyed this video, and I'll see you lot in the next trade breakdown.